I think we've all heard these common myths where you need a lot of money to start trading, or you need to follow these complex trading strategies in order to be a profitable trader because Morgan Stanley does. That trading is a guaranteed way to make a ton of money, and 90% of people fail trading. Now, I'll be debunking every single one of these myths, as well as a couple other myths that you might have heard, because the answer might actually surprise you. And I'm going to be showing you guys my real world examples of this, because most of these myths I've heard, and I've seen the truth of every single one of these myths, and I'm here to share with you guys. Now, the first myth that I've constantly been hearing a lot on this space is you need a ton of money in order to start to trade. And I'm talking about $10,000, $25,000, which is the most common one. And some people even think you need $50,000 in order to start trading. Now, this simply is not the case, and I'm gonna tell you why. Number one, when people are referring to the $25,000 thing, this is something called PDT, and this is a margin account. Now, there's two types of account, cash account and a margin account. Forget about margin account. I don't know why anyone would be on a margin account, but that requires you have $25,000 in your account. Versus a cash account, you could have as little as 1 cent in the cash account, and you can start trading with that 1 cent. Now, I recommend, for educational purposes, you only need $500 to $1,000 in order to start the trade. You don't need a ton of money. The reasoning behind this is because if I could learn the same exact mistakes and the foundational tools needed with the least amount of risk, then do that. A lot of people come up to me and say they have $10,000. I tell them absolutely not. $500 to $1,000 is all you need, because you're most likely going to lose all of that. And would you rather lose $500 or $10,000? It's just the principle. You're going to learn the same exact mistakes losing $500 or losing $10,000. Now, it's not saying you're going to blow up your account, but you get the example that I'm giving you guys. Learn the same exact mistakes with the least amount of risk. And no, you don't need $25,000. You could have as little as 1 cent, like I said, but $500 to $1,000 is what I recommend educationally. Now, the second thing is, again, very important, is you need a complex strategy in order to become profitable, when it's simply not the case. And anyone that's been a trader longer than a couple months knows that it's not the strategy itself, it's you. I could have the most simplest strategy ever. I could literally play high day and low day break, and I could be a profitable trader. Why? Because it's about you. It's about the risk to reward, and it's about just sticking to your plan. If you can stick to your plan, have the right risk to reward, sell on your stop loss, do all of those simple things, then you will be profitable with pretty much any strategy out there that shows profitability. Now, obviously, if you make up some strategy, it's probably not going to work. But when I tell you most of these strategies are profitable and you're the reason why it's not profitable, then you'll start to actually realize the mistakes that you're making. And instead of blaming the strategy, you'll start to blame yourself and grow from that and become a better trader. Then, once you become profitable with the strategy, you try and find the best profitable strategy out there. That's exactly what I did. And I've been scalping momentum breakouts for the longest time now, because this is the most profitable, the quickest trades ever. And that's exactly my style. I like to make 30% in a couple minutes and risk 5%. That's a 1 to 6 risk to reward. Perfect. With that risk to reward, you only need a 30% win rate to be profitable. And imagine having an 80% win rate with that. Now, not all the time do I get a 1 to 6 risk to reward, but around 1 to 2, 1 to 4 is my average. But what I'm saying is you need to stop studying the strategy so much and figure out why you are not following your plan, why you are not following the strategy that you have for yourself. And you got to realize you're the reason why this strategy is not working. Now, people try and do it super complex. They're going to try and see what the oil prices are doing, combined with the gold, combined with the overall market. And it's just like, you're doing all that for what? If I could outpace you by doing way less, then you should start doing way less and not compensate for your lack of following your plan for a overdevelopment of your strategy. Now, the next thing is trading is a guaranteed way to make a ton of money. It's also a guaranteed way of losing a lot of money. You can make $100,000 in one single day, and you can also lose that in one single day. Trading can get you rich super quickly, and it can also take away your entire net worth in a click of a button. This is where risk to reward comes in. This is why it's so important. And now, like I said, with the final myth, 90% of people fail. I think it's true, But a lot of people get swayed away because they hear that statistic and they're like, oh, well, there's no way I'm going to be that 10%. What they don't tell you is 90% of people fail. The reason why they fail is because they don't know what they're doing. They don't have any sort of plan. They hop into the market, click a couple buttons, give up. That starts to add to the statistic. Now, with the people that actually, the 10%, those are the people that actually made a plan and actually took this seriously. The 90%, like they're just like giving it a little bit, not giving it their all, not even knowing what they're doing. So technically that shouldn't even count towards a statistic, because if the statistic was supposed to be rewritten and it was rewritten by me, I would say out of those 100%, how many people actually journaled, how many people actually took this seriously, actually gave it their all? The number would probably be closer to that 50%, because some people just can never follow a plan to save their life. Some people are way too emotional when it comes to this. And let me throw another myth out there. Your personality will allow you to not trade well. Now, that is true, because I used to be emotional when it came to this stuff where I would never sell on my stop loss and I would hold because I was on a winning streak or something like that. Now, you got to understand that that's a lot of people out there. Not just because of your personality. Yes, your personality has some sort of role on what strategy you pick with this whole trading thing. But the truth is, you can mold your personality to fit your strategy, because you cannot make, and a lot of people do this, a lot of people make an excuse saying that they're not going to be a good trader because of their personality, but it's all about that discipline. You just got to gain enough discipline in order to mold your personality to fit your strategy a little bit more. I would hold past my stop loss because I was emotional, okay? Figure out how to stop being emotional, figure out how to mold your personality a little bit, and it would fit your strategy. And that's exactly what I did. I'm not the same trader that I was 7 years ago now. My personality could have changed a little bit, but I was able to mold that, and I just wasn't in this loop of constant, I just blame myself. I'm not a good trader because of my personality. I'll never be a good trader. No, fix your personality, because there's definitely certain aspects of your personality that you could improve. If you have anger issues and you start taking it out on your monitors, get some help. You got to realize that this is bigger than trading. This is about becoming the best version of yourself, and not in that cringy ice bath, 5 o'clock in the morning, wake up type of way. Just simple things. Instead of getting super mad at your monitors, get mad at yourself, but don't react. That's the problem. A lot of people have emotions. Everyone has emotions, but it's about how you react. And the people that get super angry, they react in a terrible way to where they're going to punch their monitors, and they'll never learn from that, because now they get the satisfaction of punching that monitor that felt super great. They're going to do it again. But instead, right before you're about to absolutely destroy your PC, you just got to take a second and be like, is this going to help me improve? Or am I just going to be in the same loop that I was for however long you're alive? If you want to make that change, you have to actually react differently and be able to control yourself and have the discipline to think long term and be like, how is this going to improve me?